So
No turning back.
we're just about ready to go live. All right, so thank you everyone for taking some time today and joining us for what should be an actual interesting conversation about taxes. I know that's a strange concept to say we're going to have an interesting conversation about taxes, but I really think it's going to be great. Especially if you're someone who is interested about preachers, and how they interact with both the church and the government at large. These are important issues. We've brought in someone with expertise so that it's not just Terry and I talking about the dumb things we've done, the dumb things we know, and the dumb things other people do. We're trying to get some smarticles into the conversation, so hopefully that will take place. And to do that, we've got, well, I got to make a large reach. Brandon's going to be with us today. He is a CPA. He is a professor that teaches accounting and related courses at Freed-Hardeman or Freedom Hardley, depending on your perspective of the school. Brandon, why don't you tell us to begin with just a little bit about yourself, as short as possible, so that we can get right to the heart of the matter.
I live in a van down by the river. I've been a CPA for 11 years. I started out in public accounting and tax, and I quickly realized that there was a uncovered niche in ministers' taxation, because most of the minister clients I met with were pretty clueless on the matter, and their churches didn't know what they were doing either. And so over time, I started my own practice in 2011, and my firm has grown to 23 states. I've got minister clients in 23 states now, all over the Southeast and then sprinkled throughout the rest of the country. And so, but that's my background. I did my doctoral work on church internal controls and financial matters. So I've sort of spent my professional life, the vast majority of my professional life, dealing with church-related payroll issues, internal controls, financial management, minister's tax, that sort of stuff. So is that short enough? That's
short enough.
That's pretty much my professional background.
If someone wants your CV, yeah, well, if someone wants your CV, we'll give them a link.
Okay, yeah, definitely.
It's the easier way. So let's get right down to it. There's three areas we want to talk about. We're going to start with the preacher's relationship to the IRS and kind of box it that way. And so walk us through some of the things that preachers should be aware of when it comes to their individual taxes, both terminology, but most generalities, like reporting methods, how are they considered, employee-employer relationships, but really it's just all about the preacher to the IRS at this point.
The first thing I would think of is, the first thing that comes to my mind is that the IRS is not something to be afraid of. If you're trying your best to report your information accurately, or if you're working with someone who is, the IRS is nothing to fear. I mean, they're people too. But the IRS does have some expectations for how ministers are going to report their income. Now, because of the separation of church and state, that sort of thing that's going on here in our country, ministers have for a long time been given a pass on some of the mistakes that they make. For instance, I've had ministers who get 1099s, I've had ministers who get W-2s, I've had ministers who get nothing. And most of them just self-report the way they're supposed to, or they at least try. And for the most part, the IRS will leave you alone. But what I've noticed with the IRS is that the way the IRS typically works with a small business, and this will be a short little rant, they'll go to a business and you get selected for audit, and they'll say, let's see your office supplies account. And they'll want to say, let me see your receipts for February and December. And if they don't find anything suspicious there and everything matches up, then they're done with that category. But if they find something that doesn't look right, that opens the door for them to say, well, let's look at the other months. And then if they find problems in the other months, well, let's look at the other years. It's sort of the same thing with a minister. If a minister takes whatever form is given and does a best effort to report it to the IRS, the IRS generally will say, okay, this person is, while it's not the way we'd like it, the income is reported, and they'll go on their own way. But if there's something that's off, or there's inconsistent reporting, or the minister appears to have way too many expenses or something like that, then it sort of opens the door for the IRS to walk through. And then they can start looking at the other ministers at the same congregation. They can look at the church itself. So my advice to most of my minister clients is, and because our churches are autonomous, we don't have some hierarchy telling us what to do in our individual congregations. Every church is different. And so what I tell the minister clients that I work with is make sure that your things are done correctly and encourage your church to do it correctly for the other employees. And then if you have minister friends at other congregations, tell them to do the same thing, because if we can sort of get our financial house in order with our churches, it sort of shields the ministers from a lot of the problems that come up. And so the IRS will occasionally be aggressive with someone, but most of the time, if you try to get your act together and you do the best you can, the IRS will generally avoid you, or leave you alone at least, not avoid you. But that doesn't mean they're going to leave the church alone. But that's another story. So I don't know if that's exactly what you're looking for, but
that's part of it. We're going to talk through some of these issues in a second with paperwork requests like W-2s, 1099s, and some of that with the church and the preacher relationship. I think it is important to note that for the most part, all the preachers I know of who have dealt with the IRS in the audit capacity, it has been unintentional, ignorant behavior. There's no intentional malfeasance. There's no intentional, hide this, don't do this. It's based off a pool of ignorance that typically sorts around from preacher to preacher.
I totally agree.
And reporting matters then get worked out pretty quickly. I do know of a couple of cases where there was some intent to harm that was directed towards the preacher, from various cases, but that's more of the rarity, and that's towards the preacher from outside and not just the IRS. So the IRS was used as the billy club to attack the preacher in those cases.
Right.
And I'm sure, and this is probably just my limited knowledge, that there have been preachers who have intentionally misreported and misbehaved. And by preachers, I'm talking preachers specifically associated with Churches of Christ, not every preacher everywhere who would use that topic and title. But really, again, the preacher needs to kind of really just chill out for the most part. Do your best. And I'll say with full clarity, even though my background is in economic and finance, I have done my own taxes for a number of years. I have reached a point where, because of the complexity of the relationships that I have both as a preacher, but family-wise, my wife also works, I no longer do my own taxes. It's something where farming it out to expertise is a net gain rather than a net loss at this point.
My recommendation, before you get off of that, is that if a minister does do their own taxes, if they get a letter from the IRS, it certainly does not hurt to ask someone before you respond, because once you respond, sometimes it's too late. And so if it's something as simple as, we don't like the way you reported this, but we can understand it, and you explained it, there's certain ways you can respond to those notices when you receive those, and those are computer generated generally, so it's not like someone's hunting after you. You respond to those in a proper way, it usually makes the issue go away. But and I deal a lot with that, is people who do their own taxes and they contact me when they get a letter from the IRS, and that's fine. Some people may have a relatively simple return and they don't need the help, but at least talk to somebody before you send it off and sort of lock yourself into whatever they've said.
Yeah. Let me add this: if I got sued tomorrow, I would not be my own lawyer. I would hire a lawyer, and the reason I say that is I view my taxes the same way. I mean, we were talking before we went live. I've never done my own taxes. I've never. I mean, when I was a teenager and working, my family had a CPA connection. I didn't do my own taxes then. And so my advice, because I'm really here for my good looks, Phil and Brandon are going to do most of the stuff today. My advice to everybody listening is your life is a lot easier if you'll just hire a CPA. And I want to, whether that's Brandon, and not just any CPA. Don't go. I'm gonna say this. Don't go to a certain place that has a geometric shape in its name, because its tax experts are not really experts for what was, yeah.
Thank you.
Its tax experts are not what we would call experts in what we're talking
That's
about today. And the reason I'm saying that is because they would hire me to do your taxes, and I won't do my own. And they would hire me in a heartbeat. So go to ask around, whether it's Brandon or somebody else. Go use a CPA who is well versed in minister law and who is actively keeping up, because we'll talk about housing allowance. But I remember I think it was about Brandon, I don't remember if it was 4 or 5 years ago, the forms for the housing allowance changed. I had to do a lot of stuff I had never had to do before, as far as estimating the rental value of my house and all this kind of stuff. And my CPA went through a whole form for me. I asked my friends who use TurboTax if they had to do the same thing, and they were like, I didn't see any of that.
Right.
And so that's just an example of where here was a form that wasn't being done because you weren't using a CPA. Let's say you get through it, you're okay, you're fine. But what if you do get audited and now you have missing documentation and all that kind of stuff? We're going to talk about all that stuff. If you're bold enough, maybe, I know there's the rare preacher who went to school to be an accountant. Hey, great. But overall, hire a CPA and write a good sermon this week instead of trying to figure out your taxes. That's my advice.
The $10 word the IRS likes to use to describe what you're talking about is called contemporaneous. They want your housing allowances to be done contemporaneously, and so that means that you create the housing allowance before you actually receive the housing allowance, and so you can't wait till you get a notice from the IRS and say, oh, let's throw together a document, because if it's not, unless you violate your conscience, you can't go and backdate something like 2 years old. So
right.
So let's move to the second thing, which is some of the core questions, the preacher in the church and how that reporting works. And I want to go right to the primary question I get asked a lot about, maybe you do too, the qualifications, W-2, 1099.
Yep. Okay.
W-2, 1099, who, what, why, when, where. Break it down.
The main reason you need a W-2. The main reason you need a W-2 if you're a minister is that you're not eligible for most fringe benefits if you don't receive a W-2. If you get a 1099 or you don't get anything at all, the IRS considers you a contractor, which means you're not eligible for health insurance reimbursements, you're not eligible for college tuition assistance, that sort of stuff. And that's big. You're not eligible for a housing allowance. And so those are big issues. Now, sometimes you'll have ministers who get a 1099 and they'll have a housing allowance, and the IRS won't say anything, but they could. And so it's not worth the risk. So the easiest way for me to explain this to people is, if you're a minister, you're a located preacher at a church, you need a W-2. If there is a picture that says our staff and your face is on it, you need a W-2. If you are a person who travels from congregation to congregation, or you do side gigs, or like you go preach a gospel meeting, or you do something like that, or whatever, you go and do a wedding or a funeral, something outside the normal scope of your day job, per se, then it's okay to get a 1099. So, and those expenses are treated differently. But if you are under an eldership, or even if you're not under an eldership, if people assume that you're associated with one particular church, you need to be getting a W-2. If you are,
let's hone in on this really specifically.
Do what?
The W-2 reporting regarding the housing allowance.
Okay.
What's the violation level? Like, W-2 is inherently required for the housing allowance. Explain that. Like, what's the consequence? Say a guy does 1099, does the housing allowance, and he gets audited. What does that look like?
Well, like I've said, auditors are people. And so sometimes they're going to throw the book at you and say, oh, sorry, you didn't get a W-2. Sorry, you can't have a housing allowance, and you have to pay all this additional tax. But sometimes they'll say, okay, maybe you don't have your paperwork in order. It's not your fault. You were forced into the situation. In substance, you're an employee, but in form you aren't. And so it just varies based on the auditor. I can't give you a solid answer on that because I've seen it go both ways. But the surefire way to protect yourself is to have a W-2. The W-2 for a minister is very simple. It should have a number in box 1 for your income that is not part of housing, and then a number in box 14 to represent the amount that is housing. That should be it. Now, the church can voluntarily, you can elect to have the church withhold income tax in box 2, but 3, 4, 5, and 6 should be blank, because the church should not be withholding FICA taxes from your check. If you're subject to Social Security and Medicare, you should not be. The church is not supposed to be doing that. Ministers are supposed to take care of that themselves, unless they've opted out of Social Security. And so, most people will have, because when you get to your tax return, income tax and self-employment tax is one big pool. And so you can over withhold income tax sufficiently enough to cover both of those. And a lot of guys will do that if they feel confident in their church's ability to do that. But again, it's not required. You can do it yourself. You can have it sent in once a quarter. I always just say, do you trust your secretary to do the paperwork? If the answer is yes, then have the church withhold. If the answer is no, do it yourself.
Yeah. Side question that's kind of related to this. Should churches connect with a local CPA to do their reporting? There's not much that the church is obligated to do, but there are a couple of key areas. Because I know we have some folks who don't preach who, yeah. And also excess cash donations without documentation. They're supposed to, what's the current annual threshold or the individual contribution threshold? Is it
250.
Is it 250? 250 for
any cash donation and any check 250 or more at one time, you're supposed to give them a receipt or an acknowledgement letter at the end of the year.
Right.
And that can be easily set up in QuickBooks, so that's easy to do.
Right. And again, I just want to specify that a check no longer quantifies as a suitable receipt for those contributions individually given over $250. Is that correct?
That's right.
It used to be sufficient, but I think 4 or 5 years ago or more, they changed it and they said they want a letter.
You got to have a letter.
That's why I said or more.
And we have members at our congregation that will give $249 every Sunday just because they don't want it to fool with getting a letter. That's fine.
Right.
But yeah, you got to have that. Again, that fancy word, contemporaneous. You got to have contemporaneous written acknowledgement. So that means you have to have the letter before you file your tax return.
Right. So you've got that. Let's kind of talk a little bit about.
To answer the first question, you asked what about what kind of training do churches need? I think if anything, they should have someone help them with payroll, because that's where payroll taxes are pretty complicated. And there's several companies that you can outsource this to that are well versed in this, and if you just give them some ideas, they can usually handle it. But at a minimum, I would ask, if you've got a CPA in your church, have them look at your payroll and make sure it's correct.
Yeah.
Because that's another door that if you open, then it's a bad deal. So.
Yeah. So generally speaking, and I think this is the way to synthesize it, almost everybody who preaches for a local congregation should be receiving a W-2 because it's advantageous to them. It's good for them to get a W-2. It's bad for them to get a 1099.
That's correct.
Like to synthesize down and give like a point there. Housing allowance.
Let me say this real quick. I was at a place that didn't understand all of this, and to illustrate this way, I was a 1099. That's what they wanted to make me. But for the entire time I was there, they did a lot of creative accounting explanation to give me raises so that they could make it look better for the church, kind of thing. So there was $1,000 a month hospitality allowance. There was a $250 car allowance. So they were giving me all these, in their minutes, posted explanations, these creative allowances. And they were telling me, well, this is a tax break for you or whatever. Full disclosure, I never claimed any of those because I knew from talking to my CPA, none of that applied, kind of thing. So preachers need to be very careful that you don't just trust the church you're with because you have some guys that give you this kind of advice and go, oh, well, that's okay. You got to be very careful about that.
Someone getting away with it is not sufficient justification to do it yourself. We should know that from sermons.
Right. So for me, for instance, I just claimed everything as income to avoid all of that.
Now, there are some legitimate items that are exempt, but yeah. Let me just.
But not
we'll talk about that in a second.
Not if I'm not a W-2 guy. So I was a 1099. Right. That was the problem.
Right. Every church office should have one of these in there. Zondervan once a year publishes a Zondervan Church and Nonprofit Tax and Financial Guide. It's like $20. There's an entire chapter in the middle of this that goes through every possible fringe benefit you can think of and what to do with it, how to treat it on payroll, where to put it on forms. It's $20. I mean, every church office should have one of these. And then they got another one for ministers, just for ministers, and it's $20.
Right.
I mean,
so, Brandon, let's kind of deal with a related question that got brought up. We'll put links to each of those books in the notes afterwards.
That'd be good.
So, in a lot of cases, you have a congregation that cannot fully support a guy. So maybe half of his financials will come on that W-2. And he may be receiving additional support from 7 or 8 different churches directly from Church A to Church B. What reporting should take place for those extra wages coming in? My understanding is one thing, but I want to get your answer first.
Okay, so it depends on the nature of the payments or what he's doing with the money from the other congregation. So I'm working with a couple of guys in the Midwest that are doing this. If the IRS doesn't care where the money comes from, they just want to know what is your job, what is your profession. So if you're a located preacher, but the congregation is supporting you and other congregations are paying you that way, the best way to do it is for the other congregations to pay the church and then the church pay you in full, unless you have an obligation to perform work for the other congregations throughout the year. It's not common, but I've seen a few cases where a minister will be in one church for 6 months, and then they'll jump around to the other congregations that support them, and they'll go and stay for a month here and a month there. That's different. Assuming a person is at one place and multiple churches supporting, the other churches should be considered in addition to their treasury, and then the one church that they're at actually give them the W-2 for the full amount. So,
right. And
but
now
that has
let's
to be
move
worked
into the
out
instances where there's a
don't.
theological concern. So let's say we got a theological concern where you don't want the funds to go through the hands of the other church. My understanding is that pretty much needs to be a 1099 instance where they were receiving 1099s for each of those wages.
Yes.
Is that
I agree. Yes.
Correct?
It's
not the best financial situation. Yeah.
Yeah. If it violates the conscience, then do it that way. But because at the end of the day, the ministers don't pay the same amount either way.
Does that mean that then he legally could not claim a housing allowance because of the way that's set up?
No, he could claim a housing allowance. He would just claim it on the portion that he receives from the local church. So say you got a guy that's got $50,000 salary and 25 comes from the local church and the other 25 is funded from 7 or 8 other churches. He could have a 100% housing allowance on that 25,000. That would be fine.
Right.
Now, if you have a situation where you got a located preacher who gets nothing from his local church, then you don't really have a choice, I don't suppose, than to have a series of 1099s. But it can cause some risk because of the housing allowance issue. So
if you claim a housing allowance,
you can't violate your conscience on this.
Right. So to deal with a lot of the folks that will be watching, because our viewership primarily comes from non-institutional churches. There are some guys that would be institutional guys and further off of the edges. And so most of the folks that we're working with are going to be receiving X amount from the local church, and the rest of it comes directly to them. They should be receiving a W-2 from their local church. That allows them to claim the most of that as they can as their housing allowance. Yes. And everything else should be receiving a 1099 from that supporting church.
Yes.
And those are then going to be filled into the appropriate boxes on your 1040s, your, and however else you're going to work through your process, probably using a business form as well in a report.
Yeah, you'll put the part from the local church that comes from the W-2 on the wages line, and you'll put the income that comes from the supporting churches on Schedule C, which will flow through to Schedule SC. That's right.
Yeah. So, and that's just basically all the IRS wants to know is who gave it to you. They kind of want to know that, what you're doing, and how much you got.
Right. But they're going to somewhat ignore. They're more concerned that you're correct in substance rather than in form because of the separation of church and state. They don't mess with that too much. So as long as you're making a best effort to report, given what forms you have, then you have no control over that sometimes. So let me throw one thing in here that's really important. Let me throw this in here because it comes up a lot when people are using TurboTax. There's something called a Section 199 qualified business income deduction that was started last year. It's 20% of whatever your taxable income is, with some exceptions I won't get into. And a lot of ministers have asked, if I use a Schedule C, can I claim that deduction? Well, it's intended for small business, but if you're filing with, you get a 1099, you have to put it on Schedule C, so the software will think you are small business. The answer to that question is no. You cannot claim that because if you are getting paid as an employee via a 1099, which is not correct, but if that's what you're doing, you can't get that. So a lot of guys are putting those deductions on their tax returns, and they're not supposed to. And I do think that's going to open up a window of problems in another year or so when those audit notices start going out, just to watch out for. In almost every case, ministers are not eligible for the QBID. So just we'll make sure people heard that.
All right, so that kind of answers the core questions of who should be doing W-2s. Pretty much everybody. 1099s should pretty much be used by any time a church financially supports a guy to preach, whether it's in a located capacity and they're sending support to him, or if you go hold a meeting somewhere, if you're going to do a weekend meeting, a gospel meeting, an extended whatever, you should probably be receiving a 1099 from the church to you for the time that you were engaged in preaching with them. I know it's more paperwork for everybody involved, but in the end, it will make your tax filing process safer and healthier. You'll come out better. Yes. An odd question came up, which I had never thought of before. What are the thoughts on a preacher incorporating and having his pay go through his LLC? I don't think it's going to make a difference. You probably would lose some things, but just curious.
Not a good call. It doesn't have any substance. The formation, you can't form a corporation and incorporate yourself. The IRS will disregard that in the first place. LLCs are disregarded entities anyway, so at the federal level, so it doesn't make a difference whatsoever. And it's actually a really bad idea in Tennessee because if you're a sole proprietorship in Tennessee, you don't pay Tennessee business income tax. But if you're an LLC, you pay 6%, up to 6%. So you actually raise your taxes by doing that. I've heard that and been emailed that question several times, and I wish that would die. It's just a bad idea. People who promote those mechanisms, that's shady. It doesn't do anything. It just causes problems.
Let's walk through two other things. Oh, go ahead.
Well, I don't know if this is on your schedule, but I wanted to hear this before I have to go in a minute. So quickly, something we talked about earlier, and you talked about part of the issue with the W-2s, the benefits. The housing allowance. What are some other benefits that possibly ministers are eligible for that you find that we commonly aren't aware of?
I'll hit the big ones. The big ones is health insurance reimbursements. Those were illegal. A lot of people still think those are still illegal because of the Affordable Care Act a few years ago. Those weren't legal for a while, but that's no longer the case. They're legal again. And so I recommend that ministers have their church leadership get with an insurance person and set up what's called a Qualified Small Employer Health Reimbursement Arrangement, QSEHRA, if they want to make it really formal. But the church can reimburse ministers for their health insurance. So if say you got a minister married to a teacher, and the teacher has their health insurance through the school, then you can just look at the difference between what the teacher's insurance would cost without her husband and with, and the portion that goes up because of him, you can get reimbursed for. So it doesn't have to be directly through the minister himself. It could be on a spousal plan.
Does that become non-taxable income then?
Yeah, that's tax free. That doesn't go anywhere. Okay. That's just a reimbursement, so that's tax free. Another big one is you can get $5,250 per year for college expenses, not student loans, but for current enrollment. The church can reimburse that. With most of these things, there's something called non-discrimination rules, and so if you offer it to your ministers, you have to offer it to all full-time employees, so just be aware of that. If you're going to agree to pay for your ministers' college expenses, if you have a secretary that tries to get a degree, you have to also pay them to do that too, so just be aware of that. That's the two biggest ones, the education reimbursements and the health insurance, along with the housing allowance. But again, that Zondervan book that I mentioned earlier, it's got tons of options. You can have child care reimbursements, child care assistance. There's all sorts of things you can do with this. Generally, car allowances, unless it's, sorry. I said generally the car allowance, that's taxable income. So car allowances, unless the church owns the car, if the church owns the vehicle, then it's different. But if the minister is getting reimbursed for his mileage, if he's getting reimbursed for his mileage, it's fine. But if he's just getting a flat, like here's $200, regardless if you drive or not, that's taxable income. But if he's getting reimbursed because he turns in mileage logs, that's okay. In any case, if a church is reimbursing a minister, he needs to have an accountable plan. It's just and again, you can look it up and find one. You got to have a piece of paper that says these are reimbursements and not income, because there's no longer a way to deduct business expenses for employees on a tax return. So that keeps ministers, that's another protection you can put in place. So I ranted a little bit, sorry.
With regards to the QSCRHA, the qualified healthcare expense thing, if ministers participate in those sharing plans, the health shares, like, the various will those fit in that same box too?
Those I don't think those generally qualifies under the QSE HRAs, but you can be reimbursed for your costs in that, though. The healthcare sharing ministries are still allowed. You can still be reimbursed.
Let me ask you a follow-up question.
So they don't have to be a part of.
Go ahead.
Go ahead. No, you first.
No. You're. I was going to change subjects quickly. Go ahead.
All right. So with for those share plans, because a lot of guys I know use that. How should they be handling the reporting for those share plans? Like what because normally there's a box for health insurance period. You just kind of put it in there and go about your business. How should those sharing plans be reported or planned for?
I'm not sure I understand the question.
Questions.
What do you mean?
Like, because they're not traditional insurance. So are those things that can the church pay for those directly for the guy?
Yes.
Do they have to have his own personal pocket? That's what I'm like. Could we just put them over on the church's side of the ledger, and the preacher no longer is responsible for them? Is what I'm getting at.
Yeah, the mechanism for how it's done doesn't matter. You can either pay the preacher to reimburse the preacher for his costs, so the church can pay it directly. It doesn't matter anymore. Under the Affordable Care Act rules, before the part was repealed, that wasn't allowed, but it is now. So how you do it, I just say it's up to the discretion of the elders.
How, and answer your question is yes.
Does it have to be noted on your W-2 as well, like the housing allowance, or that's just something on the forms? Okay.
If you have a QSE HRA, it'll be on there. If you're using a payroll company, they'll put it on there. But if you're just doing a traditional reimbursement plan, you don't have to.
Okay.
Right.
You mentioned business expenses.
Wages drop.
Yeah.
Yes.
Your taxable income drops is what happens there. So the question about business expenses, how does the W-2 affect a preacher? So, for instance, we traditionally, like if I buy a laptop, traditionally we expense that out, or I have several subscriptions I have to pay for. That's an expense to me. Does the W-2 versus 1099 affect that at all, or how does all that work? Just so guys are clear on all that stuff.
A lot of people have the misconception that if you have a 1099, you're suddenly able to deduct all of your expenses on a Schedule C, and that's not the case, because you're an employee receiving a 1099, which is not the correct form. If you get a W-2 or a 1099, it doesn't really matter. You can't deduct your employee business expenses. That's no longer allowed because you're an employee. However, for ministers, the amount of money that they spend on those things that they don't get reimbursed for can be used to reduce the amount of income subject to self-employment tax. So if you're paying, so you got $50,000 salary and $30,000 of its income or regular salary, and then $20,000 is housing, but you've got $2,000 of unreimbursed ministry expenses like books and such, then you're going to have 30,000 subject to income tax, and you would have 48,000 subject to self-employment tax. You would get a reduction in the amount subject to self-employment tax for those expenses.
Okay.
All right. So,
what'd you
hey
say?
guys, I gotta go. I said that's why I have a CPA. I hate to do this, but I gotta go. And I'll talk to you guys later. Thanks for the discussion, Brandon, and joining us today.
Likewise.
All right. So, a couple things I think we do need to walk through. In the housing allowance, what are the things that should be there? Like, what qualifies as legitimate housing allowance?
You talking about the expenses that are the form?
Yeah. No, like what actually goes in there, not the form, like the actual expenses.
Okay.
And then we're going to get a house question related to it in a second.
It's a tremendous list, and this isn't often left on the table. The housing allowance, it needs to be aggressively high in amount because you receive no penalty for going over, only if you go under. And so, of course, it's your mortgage or your rent and your utilities, but it also includes things like lawn care, lawnmower gas, repairs, maintenance, cleaning supplies, candles, decorations, most furniture. Every time your wife goes to Hobby Lobby and puts something in the house, that probably counts. Essentially, the only things you can't use are food, clothing, toiletries, personal hygiene items, entertainment items like you can't count Blu-rays and that sort of stuff. Musical instruments, you can't do that kind of stuff. But pretty much anything else that goes in your house, it can count for this. And a lot of people just forget this or don't do it, and they have incredibly small housing allowances. If you go over, if your housing allowance is $10,000 and you spend $15,000, then the IRS only allows you to offset your income by $10,000. But if your housing allowance is $15,000 and you only spend $10,000, then it just goes back to what it would have been like if you had had $10,000 as your housing allowance. It's okay. So it's always best to go over. And another one that people miss a lot, what if you're renovating your house or buying new furniture, or you have a kid and you got to, build out a bedroom or whatever? Then you need to change your housing allowance in that year to be large enough to cover the renovation costs. The only ceiling on the amount that the IRS has is the fair rental value of the house per month as is, which means what would someone have to pay if they moved into your house fully furnished? How much would they have to pay to be able to have that privilege? And that's usually a really high amount. You call Rent-A-Center or Aaron's or one of these places that can rent furniture and ask them how much it costs per month to rent a house full of furniture. And you'll be surprised. So I've never, ever, I've been through a few audits recently, and I've been through several over my career. I've never, ever had a minister have that in question that it was too high. And so I say be assertive with it.
Yeah. Because again, after you report, it will naturally move into the legitimate range. It's right. Really just, that's right. Again, if you're doing a housing allowance, I'm going to clear this up again as a reminder, you need to use a W-2. Like that's what they expect you to do.
That's right. I actually have a list. I have a list on my desktop. Let me pull this thing up. I'll quickly read through this list of all the items that can count. This is a big deal, and a lot of guys don't know this. If you want to go ahead and ask another question, I'll find this form. I've got a list on my computer.
Yeah. Okay. So we can kind of move into our last block. Mortgage payment is a unique thing for preachers. That certainly goes into the calculation on one level or another for your housing allowance, but really you should probably be looking at the fair market value, not your mortgage payment, to get that estimate, because you're going to get a better number, because they're going to want to know what it costs to rent it, not what it costs for you to buy it. Those are two different things.
Yes, that's right.
Hal asked that question, and that one I know the answer to, so I'm comfortable giving the answer to that one. But I kind of want to move into this other area.
I found the list.
All right, go ahead.
Let me briefly read this off. It's pretty extensive. Okay, so rent. mortgage payments, real estate taxes, insurance, improvements, repairs, room additions, carpet, garage expenses, patio, fencing, pools, appliance repairs, furnishings, dishwashers, vacuum cleaners, TVs, stereos, computers if for personal use, washer and dryer, beds, appliances, cookware, dishes, sewing machines, garage door openers, lawnmower, gas, hedge trimmer, drapes, throw rugs, pictures, knickknacks, painting, wallpapering, bedspreads, sheets, towels, utilities, including telephone, water, sewer, garbage removal, cable, non-business internet, heat, electric, and the last one is cleaning supplies, brooms, light bulbs, dry cleaning of drapes, shampooing of carpets, expenses to run lawn equipment, tools for landscaping, garden hose, and lawn care. The list of items that are specifically excluded, so you can never count these: maid, groceries, toiletries, shampoo, deodorant, laundry, dish soap, paper products, personal clothing, coat, shoes, jewelry, toys, bicycles, hobby items, Blu-rays, DVDs, computer games, Blu-ray players, and that's it. So, I mean, it's huge. I mean, how much money do we spend a year on those things?
The important thing to note is that a couple of the specifically excluded items should be moving over into the entertainment area where you're hosting people into your home. Not all of them, but a portion of it is going to be covered there too. One of the things that's specific.
Members coming over, you need to start keeping up with those receipts for food expenses. Legitimate ministry expense.
To help kind of clarify a confusion that exists, one of the questions that was asked is there a difference in a housing allowance and a preacher's library and home office? The answer is absolutely yes. There's some confusion there sometimes because of what we think about the work and how it's perceived. And so let's talk about that for a second. Housing allowance is like the whole bubble of your life, is the way I understand it. You may also have expenses for your books and for a place to study. That's a separate thing that's not part of the housing allowance.
I've not seen the second one before, a place to study. I've never seen that one before. That's news to me. I've never heard of anyone doing that. But the books, I mean,
a lot of times, like a lot of times on the forums, because people are using TurboTax, they will say, well, do you work at home? And they study at home, and so their home office becomes an excluded thing off of the business form, and that's a misunderstanding.
I see. You can't take the home office deduction unless you don't have an office provided by the church. So if the church is providing you an office, then you can't just go to your home and have the church pay for that one too. The IRS will disallow that if you're ever audited. On the books, one that is overlooked, if the church pays for the books, when you leave, you have to turn those books over to the church or it becomes taxable income. Now, I've never seen that come up, but just know that if you build up this extensive library that the church paid for, that's technically church property. So if you take church property, that's considered a taxable event. So just know that.
I'll add this. This is one of the reasons, especially for me, while I shifted away from doing my own taxes and having someone do them for me, is because there's a lot of these edges that sometimes change or ignorance comes into play, and then we can get a much better outcome if you have someone who's really good at doing the job. There's some misunderstandings like this that just constantly, the IRS changes its rules a little bit, churches change their behaviors a little bit, and your life changes every year.
And the president changes too, and Congress changes, and so you can have an entirely different political atmosphere that'll impact the scrutiny that the churches are under, and so. If we have a favorable government, then we're a little bit safer. If the government becomes hostile to religion, then we're not. And so that's just a risk that's inherent in living in the United States.
Brandon, two things before we go to our last segment. Maybe one, I don't know. Let's say someone's been doing their taxes themselves for years and years, and they realize today is the day that they need to go see a CPA. What should they bring with them to that appointment?
Copies of the last 2 years of tax returns and then any forms that they've received. I always ask if I pick up a new client, I always ask for the last 2 years of tax returns. I ask for a copy of their contract from the church I'd ask for a copy of their housing allowance if they have anything like that. And then that's really all that I would request in my business to get the ball rolling. And I'll observe and I'll notice things in the forms that they bring and that sort of stuff. But copies of your contracts, your housing allowance, and the last 2 years of tax returns, plus your current tax documents should be sufficient for most people.
Yeah.
I
think a lot of folks.
And the main reason we want to see the last couple of years is to make, while the statute of limitations hasn't run out, we want to make sure that you didn't overpay. If you did something incorrectly and you overpaid, we like to, get that back. And then sometimes there's carryover items that you need to report, that sort of thing.
Yeah. So that leads me to, I think, what is a big issue. What are some of the biggest myths that you've encountered that preachers believe regarding their taxes, both positively, negatively? Like, if you could even answer that question. We've kind of answered some of them already, but what do you think? What do you got for those big myths that preachers?
There's several. We've talked about several of them already. I think one common myth is that when you opt out of Social Security, they hit the delete key in Washington, D.C., and you don't exist anymore. What effectively happens is you just don't get credit for your work as a minister. So, a lot of ministers are bivocational. So they'll preach, but they'll also, teach in the school system or do something else. They don't hit the delete key when you opt out of Social Security. When you opt out of Social Security, you just don't get credit as your minister. So you'll still be in the system if you had wages prior to your ministry, or if you have wages during from a non-ministerial source. You're still in the system. Another myth related to that, a lot of people assume that if you opt out of Social Security, you're still in Medicare system. You're opting out of both. And so a lot of people are okay with not having the Social Security, but they're not okay knowing that they won't have Medicare. And so if you're considering that, make sure you're aware that you can't pick one or the other. If you're opting out of one, you're opting out of both. And so that has surprised some folks upon retirement when they go to file for Medicare and they find out they don't get it. And so you have to know that that's a risk. And so a lot of people think that it's not a permanent decision; it's irrevocable. The form that you have to file to opt out is Form 4361. You can find it on the IRS website. It's a permanent, irrevocable decision. The last time Congress opened a window for people to get back in was the year 2000. And so it's been 20 years since they've allowed people to opt back in who've changed their minds. And so just know that once you do that, you can't go back unless Congress changes and opens that window again. And I don't know when or if they ever will. So that's a pretty big deal. It's a permanent thing. And we're, especially younger folks, we don't do so well with permanency. We're not too... this upcoming generation is rather fond of changing their mind pretty often. And so it's a big decision. And you should not make that decision lightly. You should consider what the form says and the scriptural implications of that. Talk to your spouse. It should not be just a financial decision. So,
there's a lot that goes into it. I think, what about I know that a lot of times people will talk about, I can deduct X, Y, or Z. What is the weirdest deduction someone came to you with and you had to tell them that doesn't fit the preacher's work? I used to hear someone tell about pet expenses.
And I had a guy who bought
suits a lot.
Shotguns is another one. They called it church security expenses. They wanted the church to pay for their weapons. It's like I had an avid deer hunter. He's like, I bought a Benelli. Can I put that as a personal security expense as part of my housing allowance? I'm like, did you buy that to shoot people or did you buy that to hunt? So I've seen some weird ones, but that's probably the weirdest is the gun collection wanting to be paid for by the church.
A couple of things on the other end of it. If you're talking to a young preacher, and some of the guys who watch this series with us are young preachers, what are a couple of things they can do today to plan for 2021 taxes? Because 2020 taxes, or 2019 taxes, obviously 2020 taxes, yeah. 2019 is done.
Right.
What do they need to do today?
If you are a first-year minister or a second-year minister, until you file, until you get everything figured out. And, a lot of these people are also getting married and they're trying to, figure out how to withhold with their spouse and all this. You need to put back at least 25% of what you earn from the church in some sort of savings account until you can file and see what your tax liability is really going to be. Because if you dig a hole in your first year of owing the government $10,000, the next year you're having to take current earnings to pay a previous debt, and then you have a hole for that year, and then you have a hole for the next year. You never catch up unless you just have some windfall at some point where it allows you to. So for young guys, the best thing you can do is to start, just make it a habit, put 1/4 of your salary back at a minimum. I'd encourage 1/3, but I know that's a big ask. Because you got to think the self-employment tax 15%, that's effectively 14%, but 15.3 is what it technically is. And if you're in the 10 or 15% tax bracket, I mean, that's a third nearly. And so if you got kids or your spouse is low income, there's some things to consider. But 1/4 is the minimum I would suggest. Put that back.
And you can
Talk
do that
to somebody.
You can do quarterly payments even if you've never reported before. The IRS doesn't mind taking your money.
That's
Security Office doesn't mind.
You do avoid underpayment penalties if it's your first year, generally, because your income was really low the year before. But after the first year, that grace is gone.
Yeah. I just had one more thing I was going to make sure that we covered. It'll come back to me in a second. Maybe not. We'll see. If folks want to reach you, what's a good way to get a hold of you? They've got specific questions that are specific to their tax situation. That sounds all formal and stuff.
You can email me, message me on Facebook. Probably the easiest thing for most of you if you're watching this live feed is on the internet. So just message my business page, Brandon Lanciloti Tax Consulting, or message me. But you can also email me, brandon.lanciloti@gmail.com. If you message me, I'll be glad to give you my cell phone number. I don't really want to broadcast it here, but I'll be glad to contact you if you'll just let me know what your issue is. It's a busy time of year, so it's somewhat delayed, but I'll be glad to talk to you. Anytime a minister is not overpaying his income tax, it's another dollar he has for ministry. So that's kind of why I do this.
This has been my impression in talking to a couple of the CPAs I knew that do taxes, especially when I shifted from doing my own to now seeking to work with the CPA myself, is that generally speaking, when they start working with the CPA, their taxes drop. They pay less because the CPA brings expertise they didn't have at the table. Is that your general experience?
Yes, generally more. We would generally save you more than you'll pay in fees to us. So. And then here's the other thing. If you're already a client and you're a minister, and then 10, 15 years into this, you decide you want to move into a different type of work, you want to perhaps move into an eldership role, and you want to do something other than preach, when you start that side business, you're going to have a person who you can talk to about setting that up, and you're going to already have a person you're comfortable with and that knows you. And so all the CPAs, and I'll include myself, we enjoy that advisory role. We'd like to be the person who you can contact with your growing life financial decision questions. And we also are all very much familiar with attorneys, financial planners, bankers. So if there's other things that come up in your life, we usually know who to talk to help you get to the right people that are trustworthy. So that's another benefit of working with someone like us.
Yep. Well, Brandon, thank you for joining us today. I know we talked about, we'll do 35 minutes, and we're now at 55 minutes, so that's normal.
And we're on time in preacher minutes.
That's right. Preacher minutes are a whole different math.
That's right.
They didn't teach that in statistics. They probably should have. But thanks for joining us. Again, if folks have questions, they can message our page, they can message Brandon's page, and we're happy to answer them. Any of the tax-specific stuff, we're going to probably scoot to Brandon's table because you'll want his answer more than Terry or I's. But if it's to work with a preacher, evangelistic stuff, we're happy to talk about it. And again, Brandon, thanks for joining us today. And hopefully folks will have gained a lot from the conversation. Take care.
All right. Thank you. Have a good day.